the best place to make the most amount of money virtually always be the thing that is currently the least interesting.
This podcast is for informational and entertainment purposes only and is not investment, legal, or financial advice. Opinions are those of the host and guests and do not reflect any affiliated entities. Investing involves risk, and past performance is not indicative of future results. The host and guests may hold positions in discussed securities. Now, please enjoy the show. Felix, thanks for joining me today, and welcome back. So for those who haven't listened, we did an awesome part one. It was like an hour and 15 minutes. It flew by. It was incredible. We spoke about your crypto fund. We spoke about a lot of macro topics, kind of big picture topics. And then we weren't even able to get to venture. So I want to talk to you about your venture fund and then go into more kind of big picture questions because I love that. So
Excited to be back. Session one was a lot of fun.
It was awesome. All right. So tell me about your venture fund. So my understanding, you operate this crypto fund. That was your first fund. You launched a venture fund, I believe 5 years back?
Yeah, we launched in January of 2022. And then of course, plus give it 3 months or so of like planning and raise and everything. The mini stories, as you know, we know this is kind of where we overlap quite a bit. The metaverse was a big subject in crypto back in 2020, 2021. But the more I studied it, the more I saw that the reality from what was being communicated public bifurcated. So on one hand, you had the public thought the metaverse is Axie Infinity, right? Which at the peak was worth $50 billion, or the Sandbox that was worth like $10 billion. It had, I think, according to different sources, like 2,000 users, 10,000 users, nothing to write home about. I mean, if anything, like a pre-seed startup nowadays has more users. So on one hand, to me, I looked at, like, I saw what the media wrote, I saw the Dune Analytics, the numbers, and I was like, you know what, this is a bubble. There's no chance that these kind of companies should be worth what they're worth. At the same time, however, there was real traction happening in the metaverse, which was things like Roblox, Fortnite, Minecraft. Fortnite became a culture of its own. Gen Z really grew up on that. And then on the same time, the Meta Quest came out, the Quest 2 in particular, came out in 2020, I believe. And it had the biggest sales of any VR headset ever. Essentially, they outsold platforms like Xbox, and they also crossed historical numbers. Like, for example, more Quest 2s were sold than Nintendo 64s. And so I realized, okay, this is the first time that VR might actually have a chance to be a new platform, be a new medium. And so as I had these two realizations, I'm like, the metaverse is real, but it's probably not what everybody believes it to be. And so I said, I need a new fund because the hedge fund only trades liquid crypto. And so that means all kinds of things. It means I can only touch tokens. They're always liquid. People have a very short time horizon. LPs can pull money out every quarter, yada, yada, yada. And so I said, okay, I need a VC fund, long-term games, early stage, equity token, NFTs. The thing was also like, I gave myself the widest mandate possible because in 2021, I pretty much said, look, I'm not going to launch an NFT fund unknowing how NFTs will play out. I'm not going to launch a token fund. Maybe equity is right. So it just gave me, I said, like, we will play this vertical, and whatever medium makes sense, whether it's an NFT, a token, equity, we will do it. And so that's how we got into VC, essentially. We were a metaverse fund, and I think we left off, we touched this a little bit on the last time, we were a metaverse fund. Nowadays, we don't use the term metaverse as much anymore. But in actuality, we were more virtual reality fund, a gaming fund, right? Than anything most people would think of when they hear metaverse. And so, yeah, that was, fund one we launched back then in January 2022. We ended up raising $14.1 million, fully deployed that. By now we've had some of the first exits. Top decile to top 5% DPI, IRR, TVPI. So like everything's been going great. Now we're on to fund two. And so we already we raised the first 10 million or so fund two. We started deploying, got our first 7 companies. And so like that's all running.
Amazing. Okay. So, and also, touching on the metaverse, that term, a lot of people took it to mean like a virtual world platform where like, yes, I mean, it is part of that. Like the metaverse is, it's such a, for me at least, and what's funny is a different terminology for everyone essentially. But for me, it's kind of like this all-encompassing term that just means a more digital future. And it's, the merging of our digital and physical worlds. And that can include anything from like, augmented reality, virtual reality, a video game, Zoom, even like, Google Hangouts, whatever, all the way to like brain computer interface technology where you're like plugging into your brain, like there's such a high, kind of variability as to what it kind of, the specifics around it. But for me, it's more just all-encompassing digital future. Like it's going to merge, it's going to be everywhere, and there's not going to be a distinction really between like, hey, I'm online or I'm not online. It's just like, hey, we're all living in quote unquote the metaverse, and that's kind of how I viewed it. But I do think that people, you for LPs and just for marketing purposes, you do need to niche down. You need to say, hey, metaverse, but this is actually what we're focused on here. So I think what you're mentioning gaming and VR and et cetera, that makes total sense to me. So when you had this fund, what because you said, hey, we're going to play this theme. What were you looking for? And also it's great that you left yourself open to the different investment asset types because you didn't want to be stuck down into just venture or just NFTs or just tokens, et cetera. So like, how would you identify, or first of all, what were you looking for and how would you identify something that was promising?
Yeah. So we found the most success with top down and bottoms up. Well, meaning a lot of times people they take deal flow as it comes to them, whether that is from other VCs, cold inbound, founders, and so forth. Now, for what it's worth, founders tends to be a very high signal kind of deal flow. But you first have to get there because if you launch a brand new VC, guess what? You have 0 founders, which means nobody's sending you deals. Except with some activist investors, activist investments from the hedge fund that actually did lead to some deals. But so top down, bottom up, what do I mean by that? Top down, I mean, we looked at virtual reality, for example, and we said, okay, for this to go mainstream, right, you will need, for example, a VR native design platform because you can't design VR apps in Figma, right? So if you're going to have thousands and thousands of VR apps, there's got to be a platform that allows you to prototype, design, and so forth, right? A lot of the things that existed in 2D, we realized need to exist in 3D. And so, for example, then we went off and we looked at all the kind of players, Gravity Sketch, Shapes-XR, several others, and we ended up we ended up choosing Shapes-XR, which is now the market leader. Their customers include Meta, ByteDance, Microsoft, Accenture. Pretty much all the big tech players are using them. And so, this is this idea of okay, for this industry to succeed, what are the missing pieces, right? You'll need design, you need analytics, you need video capture. And then you identify who is the champion in them, who has the market share, who has the right leadership, who's got the traction, right? And we did this kind of piece by piece with Fund 1, where we found the number 1 design platform, Shapes-XR. We found the number 1 analytics platform, Cognitive 3D. We found the number 1 video capture platform, Live. And essentially it's create a portfolio that way. The second piece, though, however, is this is based on you being able to, I guess, be a tastemaker and understanding what needs to exist for this to work. But then there's also things that you don't know, right? And so the way I think you discovered those is through bottoms up, which is we would just play everything on the Quest store. So, if there's this was before there's this bifurcation between Quest store and App Lab. App Lab was beta kind of things that anybody can upload. Quest, so you have to get approved, you have high quality sets and so forth. And pretty much until a year ago, so these things weren't merged. Now they're merged. But at the time when we're making these investments, there was maybe 1,000 apps in the whole Meta Quest store. I think we demoed over 250 of them. So, and so the ones we didn't, they had maybe 1 or 2 or 10 plays, So anything that remotely got any kind of attention, we tried it out ourselves. And what that led to is us being able to discover things before any VC would talk to them, right? So for example, there was this game called Swordsman, which was a sword fighting game essentially in VR. And I saw it popping off in the rankings where all of a sudden it would go from brand new towards being number 1 on the Quest store for weeks and weeks and weeks. And they were also number 1 on the PlayStation VR network. And so then I reached out to those guys and, they were already doing $5 million in revenue in 2023. And so then I said and they had a big vision for how to turn essentially a one-time sword fighting game into a social VR playground, essentially a sandbox, kind of like a Roblox of VR, if you will, but more so on the combat front, right? And so then, I reached out to them saying hey, why don't we, would you be open to venture scale this, right? And then we became the lead investor and we invested at 10 million pre-money valuation. And so whereas in crypto, you get a 40 million valuation with a pitch deck, here I was able to get 5 million revenue that year and a 10 million valuation, right? And so, in my eyes, worst case, now, of course, in one standard deviation, worst case, they maintain what they're doing and it is a good revenue generating business. I can either get distributions or maybe at some point they get acquired. Best case, there is natural lift in VR. These guys have figured out how to build fun experiences in VR, and they can be one of the top 5 teams to execute on succeeding in VR gaming, right? And so like that's a nice risk return profile. And then we did this thing with like 3 or 4 or 5 different studios, and as of right now, 3 of the top 20 titles in VR gaming are in our portfolio, and every single one of them we back before they launch on the Quest Store.
That's amazing. Wow. Okay, so it's kind of you have this broader sector focus of metaverse. Then you essentially develop theses of like, hey, well, you can't make this in Figma. You're going to need a certain design software, Shapes XR, et cetera. And you're kind of developing theses that way and approaching those companies of, and you said that the market leaders that are building out those different theses that you've developed, but are you identifying, like, how do you categorize a market leader? Is this purely based off revenue? Or is it, man, this team is insane, they're so incredible and they're killing it? Or like is it just purely a numbers question?
Most of the time, those two things are somewhat related, meaning if the team is so incredible, they should also be able to close big deals. They should also be able to make some money, right? Now, it depends on what stage of the company you are getting involved at. I think when it came to things like VR, something that is always very helpful is identifying signal from customers. Like, I don't care who's investing, because usually in VR, you don't have a lot of generalists invest. So like it's usually the same suspects, people like ourselves, maybe Boost VC that like touch VR. So to me, other investors is not the signal, it's really the customers. And so for example, with Shapes XR, Meta was their biggest customer, right? And Meta was even using it to like design their own operating system and things like that, right? Or what was also very high signal for Cognitive 3D, Cognitive 3D does spatial analytics. And I think Meta used to try to do that themselves. They gave up on it and said, we're going to license Cognitive 3D instead. So you've already played out the risk scenario of, well, what if the incumbents do it? Why wouldn't Meta just do this? Well, Meta tried. They weren't successful. They're now paying us hundreds of thousands of dollars, or like in the case of Lyft, millions of dollars to use our tech, right? So I think that is a big piece. I think one of the beautiful things I like about frontier tech investing is when you're early enough, you're also investing in a category, in a space that is very missionary driven and very low mercenary, right? And so crypto was somewhat like this maybe in 2016, and then again in 2018, 2019, where people realized like, you're losing money being in crypto, right? And so as a result, there were good intention, smart and ambitious and visionary people, right? The same thing exists, I think, right now in virtual reality. It exists in BCI. The problem is when a space gets too hot, whether that is crypto in 2021, and then, because it's been so big for so long, it has a tendency to attract bad people. It just is what it is. But I think the same thing's happening in AI right now, where I would bet that there's going to be so many fraud stories. I think the first fraud stories have already come up, where because AI is so hot, people have an easy time raising money, right? It can attract the wrong people that are just like, I want to raise a big round. I'm going to have a good time. And, maybe I can spin this up big enough to then maybe, sell hot air to somebody, right? But the thing is, because you like when you go to spaces like VR or BCI, everybody knows each other, right? And that means there's a very, very high density of high quality founders. And whoever makes it work in a bear market, so whether that is a crypto fund in 2018, 2019, or a VR founder right now, they are going to crush it when the market turns better. And so to me, that's also important. And so you do take a different lens with founders depending on the segment you're in. Like I will be materially more cynical and skeptical of anybody working in AI right now than anybody working in VR.
Yeah. So speaking of that, the diligence process, are you, of course you're meeting the team and talking to them, but what are these kind of processes you go through in order to suss out whether or not these founders or founder are people that you guys want to back?
Sure. There's both qualitative and quantitative. So, we dig through financials. We will actually want to see, like, do the things they say line up with what they've actually booked? Because even the term revenue can be so tricky. Sometimes people conflate revenue with pipeline, like potentially backing, right? To say like, oh, we're targeting 5 million this year, but you're 7 months in, you only collected 1 million, right? And then like, what kind of revenue is it? Is it actually like subscription? Is it recurring revenue, or is it just services, right? I mean, if you're just running a glorified agency, that's not venture scale investable. So, on the quantitative side, it's those things and being thorough and actually asking for validation. And then on the qualitative side, we found a lot of benefit in reference calls, right? I think it's something that's oftentimes overlooked. When I say reference calls, I mean all directions. I mean, prior investors. Now, the problem with prior investors is that they usually have a bias to want to make sure that you invest because they benefit if you invest, right? But you can always hear out like in the subtleties of how people describe companies. Like if you love a company, like you'll rave about them. If you're like, whatever, you'll be very toned down in how you talk about them, right? So it's things like that. Then it is customer reference calls. To me, that is probably the single most valuable thing I can do. So for example, like when I look to back a VR game or any kind of VR content, I just jump in the game and I will talk to the players. And I might spend 3 hours in there just switching between servers and like talking to the people. So like a lot of times, like it's kids. I'm like, hey, how do you like this game? Like, how does it compare to this in this game? Like, how have you been playing it, right? And you can really quickly figure out, what the actual sentiment is, right? Because it could be that a title is currently popping because they just launched, but then most content crafts look like this. We've got a big launch and then the tail. So if you're diligencing something, here you can make the false assumption that we're just going to expand this out, and a couple months later you're going to be at 10 times the market size when really you're invested at the peak and it's fizzling out. But then, like when it's enterprise SaaS, we say like we look at, okay, where's the money coming from? So let's say the biggest customer is Meta. Well, we'll ask for a reference call with Meta. So we'll jump on a call with them and say like, how do you like it? Yada, yada, yada. And again, you're very quick. The customers are by default more honest, right? Like they have no incentive to hype something up that they think is not good enough. But then also, if we're lacking in that, if it's like pre-seed opportunity, first time founder, no customers, right? I might check prior references, right? So for example, I look up with one of the founders I was looking at worked at a big tech company, and one of my founders is friends with the founder of the company. So I just hit him. I said like, hey, I know you're friends with the founder of that company. Can you ask him what he thinks about this person, right? And so I think very quickly you can create a stress test against the story that the founders are presenting, right? And I think you can capture the 80-20 there, but you still have to realize that you will not find out everything else until maybe a year after you invest. Because to me, the capital, the raising process for founders is very much theater, where they will you have to assume that this is like dating, like this is they're putting their best foot forward in this current environment. It will only go down from here most of the time, right? Unless they view you as like a small fund and over time they build respect for you and all of a sudden they treat you better. That's happened too. But most of the time, again, expect it gets worse. And so that's also why we start with small checks. So usually with fund two, we're starting with a small check at first, 300K. Everybody gets 300K essentially. And then after we've built a relationship with them over 1 or 2 years, if we believe that they are actually one of our few A players and they've lived up to everything they've said they would, then we fall on with like $1 to $2 million. Because I think so much of the diligence happens after the fact. I'm sure for you in your portfolio, today you could probably with closed eyes point towards the start where like they have a chance of actually becoming a unicorn, and who's probably or maybe definitely not becoming a unicorn, right? Whereas you didn't know that when you first invested.
So, talking about founder traits, I'm always curious about that because I have not found, I always ask, people on the pod, like, hey, have you noticed any correlation between founder traits for the founders that are successful and, or even the founders that are not successful? Because I feel like founders are unique people where, you can have what most people would consider a negative trait. It actually is positive when it comes to creating a company and running a business and whatnot. And have you noticed any sort of founder, like reoccurring traits within founders that you're like, okay, they're really argumentative, but they have really strong feelings towards that. Therefore, that's generally a good trait. Or have you noticed anything like that, or not really? Is scattered?
I would say high clarity, speed. I was going to say high energy, but I don't want to misconstrue. So when I say high energy, like, this idea it's over like of alpha, like an alpha where it's like they know exactly what they're doing. They've also got a certain energy. They're not like, if something bad happens, then like, oh, me, poor me, but rather, they tackle the problem. I feel like there's a certain energy that you have with like really strong founders. that you can actually suss out pretty quickly, which is also why we tend to do in-person meetings before investing. So it's harder if I do something like, we do back a decent amount of companies like in Eastern Europe. So it's a little bit harder, like let's say for me to fly to Ukraine right now and meet a founder, right? But if it's domestic in the US, like I do want to meet them in person and just get a feel for who they are. Because again, I think the right founder, especially at these early stages that we back, oftentimes matters so much more than the exact strategy they're pursuing. Because the strategy might be wrong, but the right founder will figure out how to pivot and alternate it. I also want to see obsession with what they're building. So, for example, we talked earlier about the smart glasses. One of the founders we backed, Caden, he's been building smart glasses from an RV for like the last 7 years. He was studying under, I think his name's Steve Mann, the creator of the Google Glass, right? So he was in MIT Media Lab studying under the guy that made Google Glass. He's been in his RV building smart glasses, hacking things. He's got one of the biggest YouTube channels for AR, where he's just been experimenting, showing cool things. He's been tinkering, building, but like that is for he's still young, but like that is his life mission over the last decade or so, right? So do I believe that if somebody's going to figure out how to make smart glasses work, it's him? Yes. Now on the flip side, if I talk to a founder that did crypto, psychedelics, yada, 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 and is now pivoting into AI, that he's going to be the guy that figures out something highly complex in AI? Probably not, because again, like he doesn't have the same frame of context that somebody would that's been dedicating his life, so to say, to it and has been like in the weeds. And then of course has also built a crazy network where he knows all those people. So to me, obsession is very, very, very important, where I just know like they love this so much they would do it for free. Because the unfortunate chance is that there might become a time when they need to, right? Tough times usually come when you least expect them. And then it's exactly those founders that say, I'm okay receiving a $0 salary or something very low, and I'd rather put everything towards the team, right? So I optimize for that. I think something else, and this is sometimes to fault, sometimes to benefit, in bear markets to benefit. I'm German, and Germans tend to be very frugal. So I love founders that are resourceful. So something that is a huge pet peeve for me are just these super wasteful startups, where we see this especially in crypto.
Yeah. I was like, we should cut that out. Yeah.
Okay, then we'll skip this one. Yeah. That's why I pause. I'm not gonna. But like in crypto, like we have companies that will spend millions of dollars, right, on marketing when there's no product yet, right? And I am really big. Like you should not spend money on marketing until you have PMF, right? And so essentially, like in game studies, for example, sometimes we found companies that spend $1 million a month, right? And then there's others that can do the same thing with $100,000 a month, right? Now, the problem is the company that spends $1 million a month likely has, better brand. They're market recognized. They've got bigger investors. And so it can be easy to think that they are the winning horse. I want to be part of them, right? And this applies to everything. Like that in crypto, you have it in AI, right? Like AI, look, the new version is, she might be like the former CTO of OpenAI, Murati, right? She just raised, I think, a $12 billion seed round, right? Obviously, incredibly talented. She was a top dog at OpenAI, obviously very connected, but something just tells me that because it's not just happening with her, it's happening with like maybe half a dozen others, right? Or a dozen others. And so for most of them, these things will completely flame out, right? And again, at least if you do something crazy like that, you do it with highly talented people like that. But we see it so many times where brand new teams, and actually to circle back just a little bit, this usually happens because of pedigree. I think people over-index on pedigree, where they will underwrite rounds that don't make sense just because, well, he did this before, or he was part of this company, right? So it's like, if it says like, oh, well, he was Stanford, he's ex-Meta, he did this, he must be good. And all of a sudden, people will back crazy valuations with no traction, with no PMF, no customers, because it feels safer delegating the responsibility away essentially at the institutions that trust them before. I think if you want to make money in venture, like you have to do the harder work and absorb the risk, meaning you have to underwrite deals that nobody's underwritten yet. And that's how you find market asymmetry, right? Because if everybody already believes it, then it's the alpha is arbitraged away. But if I find, for example, let's say a really talented team out of like Poland or the UK that nobody's backed it, but like even if they don't have the perfect background, they deeply understand the problem because they're dreaming about it, sleeping, when they sleep, they think about it, when they're awake, they think about it, and they have the execution skills to actually make it happen. I can back them at a 5 million valuation instead of at a 100 million valuation, right? And then you do that at scale. And I think that's kind of like how you actually generate outsized returns in venture versus just meeting the benchmarks, which, as we've been seeing on Carta, they release those annual reports, the benchmarks tend to be quite poor. And like I think VC is going to have a hard time. Like if VC averages perform at or below the S&P 500, the industry is going to have a very, very hard time, because why on earth would an LP accept illiquidity when they're getting less or equal to what they can do by just holding an index of publicly traded companies?
Totally. Yeah. No, I think the summarization is obsession, or like find people doing their life's work, and if you find that, then it's tough to lose. Quickly touching on the Mira Murati kind of thing, because we're seeing tons of folks from OpenAI. They left. They're raising massive rounds. From a venture standpoint, let's say you manage, I don't know, $5 billion, and OpenAI is already taken by Thrive and a few other folks, so like you can't invest in that. But you're like, hey, AI is such a large market. The potential here is so massive. It kind of does make sense to, and I agree with you. Like there's gonna be tons of flameouts, but it's almost like, hey, we're in the game of finding the 1%. And if you can get the founding team or some of the founding team from OpenAI at a $12 billion valuation, which sounds insane. It is insane, but like it does make some sense to be like, hey, I can't get to OpenAI. Mira has a chance. Maybe it's a small chance, but a chance at making something even remotely competitive. I'm gonna back that. Well, what are your thoughts on that? Is that just like even the venture math that doesn't make sense there?
I think the issue is that people look at markets in isolation, right? And I think the same thing happens in crypto. Like let's say you miss Solana. So what do people do? Let me go back the next up layer one, right? And then first of all, that hardly works out ever. But also you forget the point, like why overpay for asset B when there's entirely different category industry C, right? So what I mean by that is, in the same moment that somebody's underwriting Mira Murati at 12 billion seed with nothing to show yet, from what I understand, CRISPR, I think, is trading at like a 5 billion publicly traded market cap. Or Grail, early cancer detection, I think is trading at maybe like $1 billion, right? Or again, Gorilla Tag, the number one like VR, they're trading at, I don't know what the official price tag is, but from the grapevine, I think they're raising at like a 300 million or something. I don't know what the number is. The bottom line is, most investors, they invest for absolute returns. At least that's what they say they do. But what they really invest for is perception. And what I mean by that is, like, you say you care about returns, but really what you care about is other people thinking that you're smart, or thinking like that you're relevant, or that you're part of the current thing, right? Because it is totally fine to, like, let's say Mira crushes it, right? Okay, let's say they become worth $250 billion, quarter trillion, right? Congratulations, you made it 20x. Lots of other ways to make it 20x, right? With a much higher likelihood, right? Now, of course, you could say, well, but the winning AI company will worth trillions and trillions of dollars. Okay, sure, but then you have to multiply that by the actual chance of her succeeding. And the chance of that company succeeding when there is one already, there is XAI, there's OpenAI, there's Anthropic, and then there's all the upsides. I think like her other former co-founder, Ilias, also has his own startup, right? So like, I put that at sub 1%. So then let's say you do become, if you expect that the best case outcome, it becomes worth 10 trillion, but you have a 1% chance. Okay, then the expected outcome is 100 billion. We're back to the point of like, it doesn't look like a great investment to me, right? And again, it's under this, I think it's under the reason it happens is because the CIO is in charge of a lot of money. They don't know what to do with the money. And mandate-wise, it's easiest to sell, we're doing AI. We're part of the new thing. We got this exciting new deal by the former OpenAI. This could be a big one, right? Versus just saying, hey, forget about the FOMO and just like, where do I have the highest, again, if absolute turns the North Star, where I have the highest odds to make the most amount of money? And I think that that's one of the trickiest thing with capital markets is that the best place to make the most amount of money tends to virtually always be the thing that is currently the least interesting. Like, yes, everybody was investing in crypto in 2021, but like, I noticed with my own LPs that invested in 2021, they were underwater for years. You were late. I'm sorry, but you were late. If you made a lot of money in crypto, you probably invested in 2018, 2019. And guess what? 2018, 2019, crypto was hated. People thought it was a scam. Like, you got shunned out of rooms. I remember being at a poker game. It was a charity poker game, and I told somebody I was a crypto hedge fund manager, and he looked at me with like disgust almost, where he's like, I guess we all have to make our money somehow, like essentially like I was ripping people off. And that was hard because the guy was like high up in finance. And at the time I was like 24 years old. And that I still remember that because I'm like, that's like, go after yourself. Like, I put a lot of love and passion into this, right? But the reality is you had to be somewhere incredibly unpopular to make money, right? Again, so I asked myself, what are incredibly unpopular spaces right now, right? And again, XR is one of them. I think BCI is slightly one. It's a little bit sexier, but it's poorly understood. Most people don't invest in it, right? To some degree, gaming has massively fallen out of vogue, right? So there's also like something there. Crypto was unpopular a year ago again, right? Like before stablecoins, it was, and before stablecoins, before Trump, again, crypto was in one of those sweet spots, post FTX. So I just think, again, I could be wrong, but even my short lifetime as an investor, anytime you're just jumping in stupid size at the current thing, it just doesn't work out. I believe that the Miro Murati kind of deals will be similar to the institutions that threw billions of dollars at Sandbox, or at $10 billion, or that threw money at random crypto companies at the very peak that they should have never been worth, or metaverse companies, right? So AI does have tons of like innovation breakthroughs. I use AI every single day, but I do think that doesn't negate the fact that there's a somewhat of a bubble. People will lose a lot of money, particularly in these lazy late stage deals. That's my take.
Absolutely. No, I think, and also, we're talking about you, a craftsman of venture capital, doing the venture capital craft, and someone investing in Miro Murati's company at 12 bill. That is an asset manager that is deploying huge amounts of capital, and it's kind of they're not really craftsmen. That's more of like an operational PE style fund. So they're kind of like different things. It's like the fund size often will inform the strategy of what you're going to be doing. So just a point, because I think that tends to be the biggest function in general, right? Where people say, well, if you have a fund that is if you have $50 billion, let's say you're Andreessen Horowitz, right? Like, where do you deploy $50 billion, right? Like, they have Speedrun. Like, Speedrun does call it 50, 60 companies twice a year. So that's 120 companies. 120 companies, they're investing $1 million each. That's only $120 million, right? It's $120 million a year. You need, let's say you do this over 4 years. Congratulations, you invested $500 million. You still only deployed $500 million out of, let's say you have, again, I think right now ASIC-Z has $50 billion, right? That's 1%. 5 years of incredible work in an accelerator, right? Which all goes to show, meaning you have to write really, 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 really large checks somewhere, right? And then the places, well, where do you do that, right? It still needs to be private markets. So this has to be these crazy high valuation rounds. And then it has to be an incredible fund that even deserves to have a private market company worth that much. So that means Elon will get back every time he has something, right? And then somebody that has enough pedigree from, a recent company. Because like most founders with the pedigree to raise those kind of rounds, they're going out of the business, not into the business, right? Like Bezos is more checking out than in. Bill Gates is checking more out than in, right? Sugg is one of those only last few,
original founders from Silicon Valley that's still running his company. But he's also not, unlike, for example, a lot of guys in crypto, like not starting 5 new startups on the side, right? Like he has one company and that's it. But of course, if Zuck were to start a new startup, right? Like for example, Brian Armstrong, founder of Coinbase, he also has co-funded, I think, at least 2 other companies. I know I think Research DAO or something like that. It's a what's called DeSci company. Yeah, it's a DeSci project. So Brian Armstrong co-founded, he's on the website, he co-founded a DeSci project that's also, I think, worth over $1 billion, right? So of course, but then people say, well, Brian Armstrong's co-founding, so of course, you need 100 million, here's 100 million, right? It just comes about very rarely that highly talented people are raising for companies where it seems like it's an easy pick. Now, the problem is, you're right, it can be an easy pick. But then the problem is, do you still have meaningful enough upside, or because it's such an easy pick, the gain has already been arbed out because everybody wants in?
Okay, so talking about different areas and different sectors, Brian Armstrong, I think one of the things he's interested in, I don't know how much he's pursuing it, is longevity. Also, Fred Ursum, former Coinbase founder himself, he went to go start, I forget the name of the company. It's a BCI company though. Neuron, I don't know. But anyways, brain-computer interfaces. So you have these guys that were in crypto, and now they're kind of branching out a little bit. What are your thoughts on spaces like, we touched base on BCIs previously on episode 1, but for this, what are your thoughts on longevity? Is that an area that obviously maybe you're not looking at it now, but just how does it interest you on a personal level?
Huge. No, so I do both. I look at it on a personal level, and I'm investing in it, but just as an angel. Since we don't have a fund for it, ironically, I think longevity is something that or call it 95% of people look into after they made some money, because after you scratch all the itches of like just random entertainment things you want, then you start thinking, well, what's the next most valuable thing? Of course, after children, everything that I can take care of, it's, well, how do I live longer? How do I live better? And how can I make myself faster, smarter, stronger? Right? So I think when it comes to longevity space, you can like split it into two different camps. One is disease prevention. And so like, the most common reasons why we die is, heart disease, it's metabolic failure, it is cancer. And then it's also things like in old age, like for example, like Alzheimer's, issues with the brain. So on one hand, you can just take the preventative route or like the therapeutic route where we say like, if we solve those 4, most people will already live an extra decade, 2 or 3 or 4, right? With that, like depending on how early somebody dies, right? Like somebody dies at 50 because of a stroke or a heart attack, right? You just spot them an extra 30 years by solving for it, right? Then, that kind of falls squarely under like medical and biotech already. That's not quite longevity, but I mean, it literally serves the purpose of living longer and better. And this is like where like thought leaders, like for example, like a Peter Thiel, like focus more on. Then there is the popular longevity side, which is how can I be skinnier, smarter, stronger, and so forth with the least amount of work, right? Like, and to that, I think you can look into things like, for example, GLP-1, right? Like Ozempic, where people realize there's this whole new there's this thing called peptides, which are short chain amino acids, right? What's it called when you're diabetic? You take
Insulin.
What's in charge you take when you're diabetic? Insulin, right? Like insulin is a peptide, right? So insulin is literally just a peptide, and it solved a huge issue for people, right? We're talking about, again, metabolic disease, and it saved a ton of lives, right? People realize, wait a second, there's other peptides that also have beneficial effects. Like for example, there's BPC 157, which is for like wound healing. There's CJC 1259, ipamorelin, which does like growth hormone release. There's brain ones like CMAX, cerebralizin, Salank, and a couple others that actually enhance your neural functions, whether that is memory, repair, and so forth, right? So there's this whole new category, for example, with peptides. Like I take them every day, so I'm doing this out of like personal interest. Like the problem with peptides is actually that they're not investable, because you cannot patent a short chain amino acid, because like it's just a regular molecule, right? Like, which means there's been no incentive to really fund research, and 2, if anything, there's been interest groups lobbying against it, right? Like there's the FDA, for example, forbid all kinds of compound clinics because they're like, well, anybody like Ozempic uses GLP-1, but they don't own GLP-1. Anybody can make their own knockoff, so to say, because it's literally just a compound, right? And so companies don't like that because they realize, well, it's much more lucrative for us to sell patented medicine than for people just to inject themselves peptides, right? So that's in one of those buckets. There's other really interesting things like stem cells. There's something called, stem cells essentially can go in and repair anything in your body, right? Stem cells can take the shape of any other cell. We have a lot of them when we're young, when we're babies. We have less of them when we're older. And so people pretty much inject themselves stem cells. Where do you get them from? Sometimes the umbilical cord, from a mother. So mothers can literally make money off of selling their umbilical cords. Like there's companies for that, right? Exosomes. And then there is what's called this thing called senolytics, which essentially is the idea of as our body ages, we've got more and more of these dead cells, which are becoming like zombie cells, senescent cells, right? And over time, they just aggravate the body because more and more of our cells are actually dead. They're not doing their functions anymore. So how do we flush them out and replace them with new healthy cells, right? And so that's another area of study essentially where we could solve death. Where currently nobody's ever lived above the age of 120. So there's some magical barrier there where we just haven't been able to get older. But I think step one is, how do you go from a life expectancy of 70-something, 72 to 120? That's already 50 years on average, right? And then how do you break that barrier? So lots and lots and lots of interesting things there. And I think you have a wide ethical spectrum. Like, I think ethics doesn't make sense here. I think, people are like, if you can help somebody live longer, I think that is ethical, period, right? Now people could say, well, not everybody can afford it. Sure, but we'll get there. It will be expensive once, and eventually will affordable to everybody, like every other breakthrough in the world. And now we're getting into something really interesting too. That me and my girlfriend were currently like in the IVF cycle. We're looking into like freezing embryos. I'm freezing them because I need more time to work, essentially. But it's best to get them when you're young and when you're healthy. But what's cool is that there are these companies that allow whole genome sequencing from embryos from day one, right? So instead of you turning 60 and realizing, you have a predisposition for diabetes, right? We can now find this out before you're even born. So, you take an egg, you take a sperm, you fertilize them. They take 5 days to go into plastocyst. They're like 150 cells. You take 7 of these cells, send them to a lab, and they can do a full genome sequencing, like 99%. And then identify both indicative, whether there's abnormalities, but also predictive, where you say, based on all the data we have, there is a 40% higher chance that this person will have early onset Alzheimer's. There is a 20% chance that this embryo will be smart, tall, blonde, blue eyes. And that's when you get into like the eugenics part where people are like, oh, we don't like it. But most of these companies, like for example, there's Orchid Health or Nucleus. These companies focus specifically on like diseases. Like they map over 1,200 diseases to identify which is the healthiest embryo. And essentially that is as preventative medicine as you can get, because you're not just preventative as in the sense like go for a walk, have some water, take the supplement. It's more like we are eradicating disease before it's even born, or like we're picking the healthiest of people from day one. So yeah, I think like all that is going on in longevity. So I have to take it anyway. I know it's just ranted, but like there's diseases, there's making yourself smarter, faster, stronger. There's, even before you're born, all kinds of cool spaces.
That's amazing. Yeah, no, I kind of separate, there's areas of interest where it's like, all right, you have longevity in biotech, which is like enhancing us as a species. Then you have kind of what I say metaverse, which encompasses AR, VR, crypto, all sorts of digital technologies. That's kind of like altering our reality in some sense, or enhancing our reality in some sense. And then, space, which is multiplanetary species. But so I guess, going from longevity to biotech, or biotech to kind of the enhancing our reality, like kind of the going back to metaverse a little bit, you touch base, you have these really cool glasses called even reality glasses. And could you describe to me like what they are, what they do, and how you think the future of these glasses will play out?
Yeah, so these right here are the even reality, the G1s. Essentially what you have in there, these weigh less than 40 grams, which is important because essentially there's been studies that if something weighs over 30 grams on your nose, like you're going to get tired, fatigued. It's not nice, right? So these are very light. All the compute is back there. what they have is they have a microphone, so they can hear everything you're saying, what we're saying, and they have a screen in there. So if I hold it just right, you might see a little bit of a square. It's hard to tell from the outside, which is a good thing, right? But there's a screen on both sides. And these are micro LEDs. So these are not spatial, right? So there's no 3D, there's no images, there's no color. It is all green text, right? Now, of course, since it's just micro LEDs, you, for example, what you can do is like you can still create like a map, a flat 2D map, or you can have a 2D rendition of a picture. You can still have that, but it's just green lights. They're on or they're off. That's it, right? In different brightnesses, right? So you can still create shading. What's really cool about them is that essentially they are an amazing delivery mechanism for AI tools, right? So one of the founders I'm friends with and tracking, and of course I'll be probably leading his next round whenever he's doing it, is a company called Halo. You know, what they do is they essentially they would listen to everything we're saying, and whenever they think that there's something that could enhance the conversation, make me smarter, right? Or a useful fact, it will just show me. So it's not that I'm saying like, you know, hey, what are the top 3, you know, longevity practices? But let's say we talk about longevity, and let's say I mentioned, let's say you were them, and I was talking about Senolytics, right? It would probably pick up that like Senolytics is something that not everybody knows about, so we'll give you a quick definition of what that is, right? Or we talk about, Brian Armstrong founded another longevity startup. It will quickly research it for us while I'm thinking of what the name is. It will say, it's like Research Coin or Research DAO, right? So it is, the idea is that it's predictive, like it's telling you things that you want to know without you having to ask, right? And that's super, super cool for all kinds of places, whether that is like, let's say you're in a pitch meeting, right? Like while you focus on the founder, right? It can research things for you and enhance the conversation and maybe even fact check, right? So like there the founder could be fact checked while you're listening. It could be in social settings, right? Like they're also working on this like for social settings now where let's say you actually also have camera included, right? You could walk through a bar or through, you know, whatever. And let's say it's a business case. As you walk through, it scans a face and realize, this person runs a family office and invests in Metaverse. You should talk to this person, right? Or if you, back when I was single, you know, like that, you're trying to meet somebody, right? And then points towards the girl that maybe has the most in common with you. Or it's like, you guys would really enjoy getting to know each other, right? And again, everything can be done to like whether there is native apps where people opt in, or even without it being opt in. Like everything is public nowadays. Like all for the family office one, all you need to do is reverse search the face with LinkedIn, right? And all of a sudden it sees, this person works there, right? Save yourself a lot of boring conversation networking that zero value to you, and instead, you know, really essentially optimizes basically a reality. And I think this is what like the metaverse, again, if we take our definition, you and I's definition of metaverse, we say like it's just a digital native world, whether that is LinkedIn, Instagram, it's just like really bad graphics, right? It's just 2D, but it's a metaverse, right? And to the physical world, how do we blend them? Like, how do we essentially bring the physical world up to the speed that we enjoy of the digital world and the connectiveness that we have?
Yeah, one of the things, you know, I think people are scared of technology and they're scared of the future because, you know, I hear this, and I'm sure I've been on many pitches and just talked to lots of folks that are, when I tell them about like where we see the world going, they get freaked out. They're like, oh my gosh, I don't want to be at a bar and have someone see my face or whatever. But again, if I told them like 15 years ago, I'm like, hey, there's going to be a database of you and all your friends, and it's going to have all your interests and all your pictures and all this stuff, you know, they would be like, oh my God, that's so scary. It's like, no, you're the one that made it. Like you made it and you're posting the pictures yourself and putting this information in. Like it's the way that technology evolves might sound scary from when you first talk about it, but the way it actually evolves is very user-friendly and very, like if it's too spooky, for example, Google Glass, it just doesn't get adopted. Right? Like for this, for example, like it will get adopted once there's a really user-friendly, nice use case that is not spooky whatsoever. And people are like, this is very useful. I like this thing a lot. And I think that I know it's like a small thing to say, but I think it's very important for people because whenever I'm talking about this future of the metaverse and technology merging with us and blah, 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 people get freaked out. They're like, I don't want everyone to have my data and have my information. It's like, it's already there. We've already been doing all that. So anyway, I just wanted to make that quick note, Pete.
Everything is based on choice, right? to your point, if you want to have a private Instagram account, nobody stopped you from having a private Instagram account. If you wanted to opt out of Instagram, you totally can. I've got friends that have an Instagram profile with 0 pictures. They just use it to like message their friends and follow along their lives and whatnot, right? Same thing with, people could say like, oh, Facebook and social media was all net bad, but like so many of us, particularly our generation, we probably made most of our friends, our business colleagues, maybe even our life partners through digital, right?
For sure.
And so they were like hands down, without a doubt, a net positive force in our lives, right? And I think the same thing can be said about like today we're the boomers when we look at the 13-year-olds that are on Roblox, and probably a lot of parents are like, this Roblox thing is so dumb. But I think Roblox will probably be really, really valuable to a lot of these kids in ways that we don't think of yet. I think some incredible communities will form there, some friendships will form there. People will build entire business on Roblox, right? Again, things almost never make sense looking forward, but they make a ton of sense looking back. Everybody would have told you like you are wasting your time being on Facebook, you're wasting your time being on Instagram. I was part of a young entrepreneur Facebook group that ended up minting so many like Teal Fellows and Forbes Under 30 and other incredible people that I keep running into, where I'm like, that was probably some of the best time I've ever spent was being in that Facebook group and talking with people back in like 2015, right? So yeah, I think anything that sounds scary, I would always just ask, why do I think it's scary? Like, it really gets to the root cause of it that like worries you. And almost every time, there's a different reason why, right?
Yeah, what do you think about this kind of, I feel like whenever there's rapid change, people get freaked out. And we're seeing rapid change now with AI and AR glasses and kind of just technology broadly, where we're also seeing this crop of whether it be politicians or leaders of some sort that are kind of the like kind of socialist bent, number one. So a bit anti-capitalism, which goes against technology just broadly, and also a little bit anti-tech. We've been seeing anti-tech for quite some time, but especially anti-crypto. That just the new administration is like the first pro-crypto administration we've had. But what do you foresee over the coming decade, we'll say, when it comes to this kind of anti-capitalism, anti-technology bent? Are we gonna see that swing harder towards that direction, or will we see hopefully it kind of have some sort of equilibrium? Well, some people don't like it, some people do, and most people benefit.
I think the unfortunate answer is that history tells us that until we solve our financial problems, populism will continue to rise and exacerbate until we hit a friction point, at which time we trend back to the center. We will not trend back to the center out of the goodwill of our hearts. It just doesn't happen, right? And why are we here, right? The devaluation of the dollar is real. The US has so much debts that right now I think we're spending about 20 cents of every dollar you pay in taxes just to pay interest, right? And as a result, because of like inflation, everything, housing prices are rising. So like I think the average first-time home ownership went from like the late 20s or early 30s to now 50s. So like most people don't buy their first home until like they're 54. So the young generation, right? So just make things clear, right? Like off the bat, like obviously I'm a capitalist. I run a fund, right? Like I'm very much, as of right now, affiliated with the Republican Party, sure, right? That doesn't mean that you can be intellectually honest and say, well, if you are 18 right now, I'm saying 18 because you actually have a right to vote, right? 17, not quite yet. But if you're 18, you have a right to vote. You realize that based on current data, you're probably not going to own a home until you're in your mid-50s. By the time you're ready for that, maybe even 60s, maybe you will just never own a fucking home, right? So like American dream was a lie. You studied in high school and you're about to go to college, but now the question is, will you even have a job with what you're studying? Because even if you say you are going to be front-end developer, right? We don't need front-end developers anymore. Somebody just tweeted this morning, like front-end is dead, like died in 2024, right? And you can play the hardcore meritocratic route and say, use the AI tools, become a millionaire. Absolutely true, right? But populations happen on a power curve where, on a power law where 10% produce most of the country's wealth, right? So as a result, I think I don't think they need to pay for everybody, but to some degree, now that you play the opposite extreme, you say, well, if 10% are so talented, so smart, and genuinely better than the other 90%, right? What happens if they don't take care of the other 90%, right? Like there is just bound to be population level upsets. And I think we're just seeing this, like, and you don't have to affiliate with one party or the other. Like it's just a very simple, like, I guess, mental experiment you can play. And there needs to be, if you used your brain, you would say there needs to be concessions on both sides, meaning the bottom 90% need to realize that the top 10% are carrying the world on their backs. Without them, we'd live in fucking caves, right? The 10% need to realize that unless they take better care of the 90% now, those 90% are going to get very, very angry, and they probably are going to make the world look a lot uglier, right? But people don't realize it until it's too late, right? And so, like, if the 90% win, you see what happens with communist countries. Ayn Rand, you read like Atlas Shrugged, right? The wealthy people say, "I'm out, I'm leaving," or we saw that in the Soviet Union, where I think the wealthy farmers got killed, and all of a sudden none of the farms would work anymore because the people that are actually capable were killed off, and so then like they had a famine after that, right? So there's few mouths to feed, and they still have a famine because the people that were capable enough to actually run the farms were dead. So that doesn't work. Right? You can say kill the billionaires all you want, but if you kill the billionaires, go back to the caves. That's because that's where we're going, right? Now on the flip side, right? Again, French Revolution, like you also don't want to be the one. You don't want to be the billionaire that gets killed. Simple as that, right? So it's essentially the extremes are lose-lose. The extremes are lose-lose. Tons of suffering, tons of human loss. It's going to be bad times. And so the right thing, is, for example, to say like, look, I make good money. And I would say like the right thing would be, yes, we cut spending, but also we're going to raise taxes. But we're not going to raise taxes by a lot, right? So for example, like I mentioned earlier, like I've read the book Ray Dalio published recently, How Countries Go Broke, where he essentially gave like this 3-pronged solution. He said, one, you're going to cut interest rates by 1%. Essentially what it does is it decreases the amount of interest the country has to pay. Plus, it stimulates the economy, so there's more growth, right? At the same time, we're going to cut spending by 4%. So, if you cut it across the board, 4% is not all that painful. The only reason it becomes problematic is because, there's these things in our budget that we call like mandatory and discretionary. Mandatory things like Medicaid and Social Security. So nobody wants to touch them because it's like political suicide. So then if everything comes out of the discretionary bucket, it actually multiplies the 4% cut by 3 and becomes like 15%. So you'd have to cut defense spending by 15% and education by 15%. Becomes a little harsher. But then you say, okay, we're going to raise taxes by 4%. Again, raising taxes by 4% probably doesn't kill you. Like I don't mind if tax would go from like, let's say 37% top rank to 41%. What I do certainly have an issue with if it becomes like 50, 60, 70, 80, 90 or 100, right? And then also only as long as we need it, right? Only until we actually have solved some of these debt problems. But I mean, we're like literally racing down like a very obvious, crash site where we're already paying 20 cents on the dollar of taxes in interest. That number is only going to go up and up and up. We've got, I think, a $6 trillion a year in deficit. So long story short, they all relate. Populism is on the rise because I think the wealth discrepancy is on the rise. And there's an uneven contribution, meaning if you're wealthy, you think, well, we're paying most of the taxes. We're already getting taken out. We're doing all these social services. Meanwhile, we're not being respected, right? Like we're being treated poorly. We're antagonized, villainized. Nobody wants to pay high taxes and be villainized, right? It's got to be one or the other. Celebrate wealthy people because they're producing innovation and they're paying the most amount of taxes. And at the same time, wealthy people should be more generous and looking after each other. But like it's the exact opposite. Like both sides villainize each other. So it's like, why would I take care of the people that want me dead, right? And on the flip side, they don't want to, they want to kill the person that actually feeds them. So it's very tricky. It's very tricky. But the bottom line is there is unfortunately historically no natural progression back towards the center. Usually we need to suffer through some kind of crisis first.
Well, Bitcoin it is a good response to the fiscal irresponsibility that we're having now. And then in addition to that, I do believe, I'm a strong believer, and maybe this is me being optimistic or overly optimistic, but if we can get through this period of massive change over the next decade or so, I do think that we're going to get into a period of AI overabundance where, the average living, or standard of living of people everywhere is going to increase rapidly due to, humanoids, and due to very cheap intelligence, and due to very cheap energy, and et cetera, et cetera. So I feel like it's going to be a bumpy ride, but we're so close to being in this wonderful, wonderful world that we could have never dreamed about 100 years ago. So
I would agree with that. I mean, look, AI will bring a lot of efficiencies, and if you forget about at the micro, you zoom out and you look at the standards of livings of everybody, right? Some numbers that I usually quote is that back, I think in the 1880s, we used to work 3,500 hours a year. That number's down to 1,500 years. It's 1,500 hours a year on average. So we're working less than half what we used to. Equally, the average or the median discretionary spending of households used to be, I think, 12% or 20% back in 1920s. It is now over 50%, meaning those are things, money we spent on not housing, not food, like no food, shelter, medical, and so forth, but like discretionary, like entertainment and so forth, right? Like non-necessities. So purely by the numbers, both on a Western world, both on US basis, Western world, and global level, right? The standard of living for everybody is rising, right? Like today, for example, like in Western countries, even the people in poverty have access to better medical care than a king would have had 70 years ago, perhaps, right? Why? Because we've got better monitoring, we've got better like hospital facilities and technology and so forth. So the only problem remains, and I think this is a human issue, less so than a situational issue, is that everything is all relative. So even if we lift the standard of living up, there still is a difference, right? Instead of focusing on that, hey, even the poorest in America are doing better than they used to do. Of course, like homelessness is an issue, but then even homelessness, I know there's there's other states that might accept you versus California. The problem is we're not talking, let's say, we're not talking about that level, right? Like there's actual help that is needed, right? We're talking about, average income, right? Those people are better off today than they would have been 100 years ago and 50 years ago and so forth, right? The problem is you always compare yourself, right? And so some people will just never be happy until communism, essentially, but essentially some communism doesn't work out. So I think you just to look at it from a macro perspective, you're never going to make everybody happy, but you can solve big problems, help people live longer, healthier, better, take care of folks, get smarter, more educated, solve the biggest problems, and have a good time on this earth.
yeah, I mean, we're living in an incredible time now. Like even without this AI future we're talking about, it's like, would you rather be the King of England in the 1500s, own the entirety of England and have unlimited gold and whatever, or a middle class American today, middle class American all the way. Like I have AC, I can take a shower. If I'm sick, I can go to the hospital. Like it just gobs and gobs better. But anyways, that'll be for part 3. We have to get to the closing questions now.
Let's do it.
All right, you're gonna hate this one. It's gonna be great.
Okay.
All right, you have to buy and hold one cryptocurrency for 3 years. You cannot choose Bitcoin, Ethereum, or Solana.
I vote Aave.
Ooh, okay. Tell me why.
Lindy effect. So like right now, the hottest answer would have been Hyperliquid, right? But Hyperliquid is, for all intents and purposes, still young. I think the token literally dropped Thanksgiving of last year, so we're talking less than a year. There are, out of the 10,000 projects plus that exist in crypto, very few are actually like alive and net growing. Aave makes up, I think, 25% of all the TVL in the world. It is the number one TVL destination of any DeFi project, and it, I think, makes up more than the next few combined, right? 2, it's been around since 2017. Back then it was called ETHLend. As Aave, it's been around since, I think, 2019 or so. It has crazy Lindy. It survived as a lending platform. It survived the COVID crash, the FTX, the bear markets, and so forth, right? They've now got more products like stablecoins and so forth. They're actually generating revenue. I don't know what it is right now, but it's millions of dollars either a day or a week. I think it's probably millions of dollars a week. So they actually have really great fundamentals. They've got a crazy amount of traction. They have been resilient when there's tons of competitors, whether there's a Camino, whether there's a Compound, whether there's I think liquidity, there's been several other competitors coming up along the way, but they just maintained market share without incentives, right? Because like there's always, incentives happen, airdrops or like point farming, and things get hot and then they fall out of favor again. Aave's been around for, at this point, 7-8 years. It is the number one in TVL, and it makes the most sense to get traction next few years. Why? Because if we're going to tokenize all stocks, if we're going to tokenize all assets, right, it would be the number one platform for borrowing and lending. So the odds are just very high. Like if you are a Robinhood and you want to enable yield on your assets, right, you probably want to work with the most stress-tested platform out there, right? And so, yeah, I think Aave would be a safe bet. If I were to take more risk, I would probably also bet on Hyperliquid. But I would feel somewhat safe going to sleep with Aave. Just because also from pure performance perspective, when you look at the Aave chart, Aave is nearing its all-time high. It's one of the few assets that actually performed really, really, really well, which is fair because most altcoins, they've in June hit FTX low levels.
Amazing. Okay. All right. You could give yourself one piece of advice before starting your firm. What would it be?
I don't know if it's the right one because, like, the grass is always greener. My feedback would have been collect logos first. So, like, this is something that's just, I think, going to permanently work against me until I'm a billionaire. Where I literally started my firm right out of college, right? So, which means I started at the age of like 22, 23. And that means from back then to perpetuity, my decks don't have any logos, meaning I can't say, oh, I'm ex Goldman, I'm ex AZZ, I'm ex da 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 da, right? And so I think in the beginning that is a massive ankle weight, just because investors are lazy. It is what it is. VCs look for what other VCs invested, and fund of funds, they try to see, like, did they spin out of AZX, Sequoia, yada, 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 right? And so I think I probably would have had more lift if I had, let's say, skipped 2018, 2019 and collected some logos first and then started my firm. Now, the counter argument is that, like, I got so many lessons and insights and so forth by starting from the ground up, like having to build, like, every little lever of the company I had to work on myself. Like I worked in accounting, I worked in legal, I worked in compliance, I worked in raising capital, in sourcing deals. Like I can do every single job, which now, of course, also makes me easier to delegate and hire and so forth. But essentially, I know how everything works. And that is rare because when I look at most firms, there's like 2 or 3 founders where, like, one is a capital raising guy, one is investing guy, and nobody actually knows how the full firm works as a whole. So I think it was an incredible learning experience, but at the same time, it's just the one thing I probably run into the most where I'm like, probably would have been helpful. Like even it was a 6-month internship, right? Just like slap some logos on there so that, like, you check the box. Because again, unfortunately, investors are lazy. Investors love checking boxes. So do whatever helps you help people check boxes.
All right. What is a piece of content, a book, blog, TV show, movie, whatever, that had a major impact on your life?
Give a couple. So, I grew up in like a small town in Germany. So I was like, there's nothing exciting happening there, essentially. Book that really spoke to me was The Singularity is Near by Ray Kurzweil. It's very dense, very large. If you just want, if you want just a sci-fi version of, like, getting excited, like, watch iRobot with Will Smith. Essentially those two things happen at the same time. Like I watched iRobot and I was like, holy shit, like AI robots, like unimaginable things coming from a small town that's like, everything's medieval over there, right? And so then I went down the rabbit hole, want to learn more, like, is this stuff actually real? Is this going to happen? I found Ray Kurzweil's work, the Singularity is Near, where he, like, lays out all his predictions of, like, how AI and machines will transcend biology and essentially become the next evolution of man, where he even posits that, look, it's not AI versus humans. It's like AI is a new form that we've literally created, right? It's our way of evolving past our human form. So I think that one was a big thesis-wise influence. I think on the macro side, I've really enjoyed the Fourth Turning. I think it's an incredibly valuable read given what's currently happening in the world. Essentially, it's this 100-year study of how every 80 to 100 years the U.S. goes through these cycles, and of these 4 turnings that, like, start with a crisis like the World War, right, and then they lead to like a high period where, because we've just been through the hardest times possible, like, the best people are in charge. We've got like a big mission to like serve everybody, right? And that leads to good times. Then there's the unraveling, where so then because the times are so good, there's the next phase, the enlightenment, where because times are so good, they now go past the basic needs and they want to be spiritual and culture, and like everything is like peak golden age, right? But then, of course, too much enlightenment is also oftentimes not good either. Then we go towards the unraveling, where the culture wars happen. The culture wars, when I read the book, it just felt so accurate at the time. Like, this was like 2016, 17, 18, 19, 20, from LGBTQ to like the what else is culture, like, there was a lot more rich, poor, and racist. Like, everything became very divisionary, where it's like everybody's split up into camps, from like being a unified nation towards like, you belong to this, you belong to that, you against this, you meet, and even that's also where we saw the political divide between Republicans and Democrats, right? And then the fourth turning is essentially crisis, where like all this kind of comes to crescendo, which we're currently living through. So I just found it an incredible like way guide in terms of understanding the bigger cycles of like how the world is being shaped. So yeah, I think Singularity is neo for tech, the fourth turning for macro, and I'll leave it at that for two books. But like, those are definitely, powerful ones.
It's great. All right. What is your most contrarian opinion that you have on tech?
Maybe depending on who you ask, it's maybe because I spent so much time talking with very extreme people in tech. This might seem not contrary to me, but it's contrary to most. I think we're living in like the last, maybe like, I don't know, 5 to 10 years of value being created and captured the way that it is. And what I mean by that is, I even took a pitch recently where a founder was, showing, there is company structure. One is humans oversee other humans, right? That's how the world's been running for the last millennia. Then there is human oversees AI, right? That's what a lot of people are getting excited, right? And they're saying, wow, the company of the future, one-man show, and he's navigating, millions of bots, right? Breakthrough. But that's actually really early on. Like, there's 2 more stages. The next stage is you actually have an AI decision maker that is supported by a couple humans, right? So the AI does all the work, but there maybe, again, I always say like AI is great at 99% of things, but then for the 1%, whether it's because of hallucinations or whether it's because, AI is not great at tail challenges, outcomes, predictions, and so forth. Like, humans might be better at that, right? Or also execution on the physical world, right? Before, with humanoids, humans might actually be the execution layer for the physical world, right? And then there's even another one where it's like an AI runs thousands of other AI, where there's not even human involved anymore. And so, to me, it seems like a foregone conclusion that this transition over time will happen, right? There's no real reason to believe why it wouldn't happen. But then when you also think about one timeline, we are now firmly in stage 2, human overlooking lots of AI. And I think we're going to go towards stage where the first year people experimenting, where you actually put the AI in charge and humans are just executing, right? And we're probably 0 to 2 years away from a properly just AI business, right? Very, very likely with 0, the first few are already running. Again, I looked at a startup that already has like 2 mini businesses that are run like that, where the AI comes like from ground zero, like just does mass market research, identifies what they call like a hair on fire problem, like something that people would actually like be willing to pay for, that needs to be solved. Creates a solution, makes a website, makes the payment links, creates like a SaaS product, whatever, and promotes itself by creating content, like maybe even with VO3 across TikToks and so forth. Like, it becomes a full functioning company. Now, once you get to that point, I think value capture becomes curious for multiple angles. Like, stage 1, you would say, well, the AI will make all the money, or maybe like whoever owns the AI will make all the money, so like it will go towards centralization. The counter argument is that, well, if I can figure this out, chances are someone else is also going to figure that out. This is how markets work, and then arbitrage happens. And so if we all can create these near zero cost businesses that offer products that I need, what will just ultimately happen if, that supply and demand graph, right? Like if the supply is infinite, essentially, right? Price will collapse down to zero at some point over a longer time horizon. So everything will be arbitraged away and everything will be free because we will live in an oversupplied world, right? And so then the question is like, what has value, right? Most of the apps people are investing in today will be superfluous because like anybody can create it with a click of a button, right? So I think taking a very, very, very hard look at like, what is an actual moat is super important. But so then to get to the contrarian point, we had this, there's this meme where it says like, you see the world, or like where the astronaut is pointing the gun. He's like, oh, it's always been. Where we pretty much ran the experiment. We're like the only thing that has value in a world like that is scarcity, and then we're like, it's Bitcoin. Because how do you capture value otherwise when, for example, like if you take even the incumbents, right? It can be created more cheaply. And you might say, well, but what about energy, right? Well, there's even now like the first experiments, whether it's like with fusion or micro reactors and so forth, where you can create more energy than what you're putting in, which are kind of like almost like goes against the laws of thermodynamics. But like energy will probably over time, based on all the innovations happening, even more so when AI is researching, become cheaper. So if energy is becoming cheaper, right? Hardware is getting cheaper. There is just very few, like the whole construct breaks, I guess is what I'm trying to say. And it's like, but Bitcoin is a short-term answer, but then even you say like, well, but what do you trade for? Like, I mean, I guess what even costs something at that point anymore? So it's really just all things that are scarce. And then you have to double check your assumption, asking like, is it really scarce, right? Like the asteroid mining gold, probably not, right? Land, maybe, but then if we truly live in the metaverse, right? Like, do we care about the scarcity of world land, or if we become multi-planetary, do we care about, So it's interesting. I think it's just this 10-year plus experiment of asking yourself, will everything that we believe to be true about asset value and capitalism still function the way it is when essentially you completely break the supply number of the equation?
Man, I like that. We ended on a nice, easy one. Like the entire world system as we know it is going to change. But I do think, again, we've spoken about this. We've danced around it, but you said it very plainly there. I'm optimistic. Like people always find a way.
Oh, and by the way, what I just said, it's not a bad thing necessarily, right? Like the whole system, like what it means is, well, I don't know, like in the environment where this would be true, we would globally be living in overabundance. So like we would all have anything we could possibly want and need and so forth. So I probably like even though maybe let's say like I make less nominal dollars in the world because it's hard to make money, you don't need much, right? Because if your purchasing power goes through the roof essentially in terms of like standard of living and quality of living, right? Because like what now you'd be paying for, we talk about longevity, like you probably pay tons of money on like lawyers and doctors and so forth, like that will become arbitraged away. Now, of course, personalization will always be relevant, but like there will come a point, it's already getting there now, where like AI is even better at personalization than humans are, right? So it's exciting, it's interesting, it's fast moving. Either way, I mean, I think we're living through one of the greatest human experiments in history, and I wouldn't choose a different time, because I mean, this is I think the world stands to gain materially more than it stands to lose.
Best time ever to be alive. You heard it here. Felix, where can people find more about yourself and learn more about Hartmann Capital?
100%. Hartmann Capital, which is our website, hartmanncapital.com, Hartmann with twins. For following me along, I would say Twitter is probably best. Twitter, Felix O. Hartmann. I share some insights there. More importantly, if you have any questions, just shoot me a DM. Always happy to answer any questions. And yeah, I think between those two, you'll find everything else. Like whether I sometimes do podcasts, I write research pieces, and then happy to get to know you more.
Amazing. Thank you, Felix.
Awesome. Thanks for having me.